Welcome to another episode of Million Dollar Stories, where we get to interview authors from all over the world. I love talking to authors because they have the courage to take the thoughts, stories, and lessons, put it down in a book, and share it with the many, ultimately changing their legacy and destiny in the process. And if you're an entrepreneur out there, I highly recommend you write a book. The clarity that comes with it is amazing, but you get to help others in their own hero's journey. You could become a mentor. So if you need help with that, check out dreamstarterspublishing.com. We can help you out with wherever you're at in the process. And if you have a book that's already done, you want to generate leads with it, check out bookmarketingcrm.com. Now, as you know, most of the people who listen to this podcast is, I would say, an entrepreneur or wants to become an entrepreneur. In order for you to do that, you do have to understand profitability and cost management. And that is why this next guest is perfect. So he wrote a book called Profitability and Cost Management, the difference between a profitable and a failing business. So it is an honor to have Koen Perrick with us. Thanks so much for being here, sir.
Thanks for having me. Thanks. Yeah.
Well, let's start off with the genesis of this book. This came out, I believe, about a year ago, right? May
Yeah,
5th,
absolutely.
2023. So what made you want to sit down and write this book?
Well, it was really a surprise. I will explain that. My first job was in Unilever ice cream some years ago. And within Unilever or these real big multinationals, profitability and cost management is really in place. So I worked in the ice cream department, Magnums, Cornettos, and that kind of ice cream. And as a young man of almost 30, I saw that all the necessary financial information was there. Cost per product, P&L per product group, gross margin per customer. You have to have that, otherwise you won't survive, of course, in that kind of environment. Then I moved after a couple of years. I moved to EY Consulting. I wanted to become a consultant, and I still am. I still have my own consulting firm. And what I saw there is what in my first assignments, banks, telecommunication firms, energy companies, public companies, governments. It was a culture shock for me, really, because all the financial information I was used to create and see within Unilever, uh, these companies did not have that. So that is maybe strange, but they were able to steer their company based on information on revenue and on an annual report or a quarterly report, but not in detail.
Mm.
So they did not have detailed information on profitability, which is maybe, well, it was a surprise for me. Um, and I was also thinking, how is that possible? And only after a couple of years, then I thought or I think I still understood these companies not being the profit companies, but more the public companies, the banks at that moment, telecommunication firms, energy companies, they were too rich. The, the money was there, so why should you have detailed monthly information?
Mm.
That is what struck me at that moment. And that also made the job interesting, but also difficult within a consulting firm to have progress in projects to improve this kind of information because who wants it? And in the last 10 years, 20 years, you really see an enormous shift in the need for better information. And that also goes, of course, for small firms, for entrepreneurs,
Hmm.
but also for the bigger firms. So that is really well, you call it right, the genesis of the book. And that is my surprise that I wrote down, really, and also the solution, I think.
Well, I mean, the way I was able to get a little bit more dialed in with my company was
Mhm.
because of the CRM that we used.
Yeah.
And it seems like you are a SaaS guy, right? You have, I believe, a company called Bird's Eye. Is that right?
Yeah, you're right. You're right. Absolutely.
And so what does that do? Just so people are understand. I think you work with Microsoft Azure, right?
Yeah, absolutely. Yeah. So I think in 2016, we did some projects for companies, large, small, and we presented our result in Excel because the bigger ERP systems like SAP or Oracle do not really have cost management in detail in place. So we created new information, we designed new information and presented that and delivered that in Excel. But when that happened, it was not sustainable. After 2 years, the Excel exploded. The guy or girl who really took the governance of it took another job. So then I thought, well, we have to make software to supply in that gap, so to say. So it's a SaaS solution. You can stick it to SAP or to Oracle or to the smaller bookkeeping solutions. And that's what we are doing now. So I'm not doing any project in this field without a cost report. And it's a different solution. So selling SaaS and also building a SaaS company is something really different from consulting. But that's maybe another topic than my book. But it's really interesting. It's really interesting.
Yeah, I just think that when you have the right software
Yeah.
slash the right systems and processes, I mean, your life gets better. But once again, you basically get smoother, faster, and more profitable. So there's a great quote that I have adopted, and I don't know who said it first, but individuals will always rise to their standards, but they will fall to their systems and processes. And that made so much sense to me. So that to me is the big difference between a profitable and a failing company. They have great systems, processes, and high standards. So, what is the major difference? And I'm sure you're going to outline it in this book, but what have you noticed? Is it just some people just don't keep track of the numbers even when they have great market share? What have you noticed?
Well, what I noticed is that in some companies there is simply no need for better information, and then it's difficult to make any improvements in this field, because if a company is rich, well, what should you do? But if there's some urge to do something, then what many companies make the mistake is that they make their profit and costing system much too complex. You have to make things simple. For example, if you want to have customer profitability, you want to know what you earn on your customers, and you have 10,000 customers. Do you want it for all those 10,000? No, you have to think in customer groups. Which are they? So the customer hierarchy, the product hierarchy is very important. So, but that has to do with making things simple. And those are typically also things that the Unilever kind of companies and the Procter and Gamble type of companies have all those things in place. So the structure must be simple. The costing system must be simple, and then you have a good chance that you make it. And one other thing that is really important, that the finance community should not be in charge. So it's not a bean counter subject. If you let the financials, I'm a financial myself, so I can say it. If you let the bean counters or the financials do this, they will make it complex and they will deliver information that you have not asked for. Now, I'm saying it a bit blunt, maybe, but that's what's really happening. So you have to have an internal project leader or manager or CEO who really says, I want to have this information. The top-down approach is crucial in life, but also here.
Wow, that's great advice right there. Yeah.
You have to do it top-down, and bottom-up will never succeed. Never.
You said something there I want to touch on is that let's just say you have a list of 10,000 customers. For example, us, we have a list of right around 400 or 500 customers. Okay. When it comes to the data collection on maybe a certain group, maybe a target group, and you made me initially think of the 80-20 rule, right? 80% of my revenue will come from 20% of my customers. So I need to find that great group and focus on them to get the characteristics and the data on them, and then figure out how we could serve them better. Is that what you're saying?
Absolutely. And then from a profitability and cost management standpoint, it would help if you could divide those 500 customers into some groups, which are different. And then what you then have to do is that you also determine once a year, not every day, once in a year, you determine how much time do I or does my team spend on customer group A with 20 customers? How much time do they use from the IT system? And then you make a very simple model. You can make that, for example, in an evening, and then you know what you would like to have. So what are the 10 customer groups and what are they spending? What resources are they using in personnel and also in other costs?
And real quick, how does a company like mine segment them? Is it based off of ease of working? Is it the type of industry? Is the amount they're spending? Is it the certain services they're using? What do you recommend?
Yeah, I think for customer groups, it can be an industry can be a topic, but I don't think that's what you are looking for. But many companies, of course, have industries in which they sell. And otherwise, big and small type of products they have. So you can also make a customer hierarchy with below that a product hierarchy. So you know that the customers who are using more than 5 of your products is a different category than the customer group that only uses one. But those are all examples. But this is, and that's why your question is really interesting because this is the only thing that is difficult in cost management is to have the right hierarchy of products, customers, or channels or regions. If you have those, then you know what you want. And if you know what you want, the costing model is simple. And that's really the case. But do not do it in Excel. Don't do it in Excel and don't ask it. People who like to make things complex, you have to hire somebody who knows what the 80-20 rule is.
Right.
If the person doesn't know that, well, then he or she will not understand. And then he or she has other skills that I don't have. If you want to have a yearly annual report, you have to have somebody who is really detailed in everything he or she does. But this kind of topic, profitability and cost management, customer hierarchies, product hierarchies, you need to have the 80-20 rule.
See, I love those mathematical equations
Yes.
and I'm assuming you are in that world and you know many of them. So, are there a few other ones that you could share with us? Maybe when it comes to profitability, maybe an equation that you automatically apply to whether it's whether it's to real estate or whether it's to ice cream or whether it's to
Yeah.
restaurants, any type of mathematical equations that you kind of live by. The 80-20 rule is in my blood, so I
Yeah.
apply that. But is there any ones that you can share with us?
Well, one that I can could share is that there's a distinction between the manufacturing companies, like the Unilever, and service companies. In production companies, manufacturing companies, most costs are variable. And that means that all those costs you can simply allocate to customer groups or product groups because you know the cost of those items per customer or product. 70%, 80%.
Yeah.
Take a look at service industries like Netflix or a retailer or a bank, then most of the costs are fixed. So you have to have a different allocation. You do not know too much information per customer or product. The most costs are fixed. So Netflix has a lot, 80%, maybe even 90% fixed cost. So how do they allocate costs to know what they earn per customer or group or country? It's maybe more it's more complex, and that's also where in the service industry that you may have heard of activity-based costing,
Hmm.
or at least, but that is typically something you can use in the service industry and make it simple and use simple activities, um, customer groups, simple activities. What are your 10 activities? What are your top 10 customer groups? And then you build a model activity based, and that's really something I can recommend if you want to make progress in this field.
Yeah. Most of the people who listen to this podcast, I would say, have a service-based business.
Yes.
There's an advantage there, right? There's a higher profit margin. There's a lot less, I guess you could say, of a requirements for systems and processes, less fixed cost, right? You have a
Mhm.
lot more free way to outperform your competitors based off of branding and marketing. So,
Yeah.
but also with the value that you offer. You are going to be compensated with two things: to how well you articulate your solutions and the value that the marketplace deems in the solution that you offer. Is that right? I mean, it's just
Yeah,
that simple.
absolutely. Yeah. So for
So,
service companies and service companies, well, if you take a step back, that you could say that all the American companies that started before World War I and II, they had all this kind of information in place. They already had a P&L per product group and that kind of stuff. The service industry was too rich to some extent, and they have to build those systems. But also the new smaller companies are indeed service companies. Of course, there are also startups in production, but I think production is maybe simpler also to implement because the best practices are more in place there.
hmm,
Because it's more than 100 years in place for manufacturing companies to have this information. But for service companies, if you are a new Netflix, how does your where can I buy a book, a textbook where this method is explained? Well, the books are not there. I tried something in my book, but I'm not. But the service company costing is something different than production costing. And everyone who has studied economics in the US or in Europe has learned about cost management, profitability management for production companies, for factories. That's where it all starts. And then that is explained and everybody understands it. And then they go and work for a bank. Well, what happens? You cannot use it. Not at all. How many products does a bank have? Well, each mortgage, each customer group, well, maybe millions, trillions. So it is a very different approach towards management information.
hmm. And if someone's out there listening right now,
Yeah.
and you
Yeah.
obviously know the
I
financial
hope
side.
I hope they have
Yeah,
yeah.
if somebody's out there listening and they have not started a business, what's
Yeah.
your recommendation? I mean, is it basically as simple as to get started without as much capital as the big guys? You need to start a service-based business and then grow into a production or a product-based
Mm.
business. So, is that your recommendation because of simple accounting, simple profitability, and then simple scalability? Is that what your recommendation is?
Well, my recommendation would be that if you start a new business and you start with one employee or one partner and you have 5 people, and start with giving yourself the right information within a couple of months. Don't wait until you're 3 years further. And there are companies who don't exist anymore because they do not have this information in place. Of course, the marketing and the customer base is much more important than this subject, but you have to have a monthly or quarterly overview of where your expenses are and where you earn your money. And you have to be very clear on that. But the point of course, many creative people are not so interested in finance in the first place. So they keep it somewhat of them, and that is a pity. So my recommendation is, well, maybe take a course for 1 day or 2 days in financial management. If you are an entrepreneur, it cannot be the case that you are not interested in finance. So take a course of 2 days or 2 evenings maybe, and learn from the entrepreneurs on this field, on how to build a P&L in the long term. How does your cash flow work? What is an investment plan? That is somewhat further than what my book is, of course, going is about. But
Yeah. Well, two things that you bring up quite heavily in this book: management accounting and cost accounting.
yeah, absolutely.
I was a finance major, so I had to dabble into these management accounting and cost accounting a little bit in school. But for
Yeah,
the average person out there, what's the biggest difference? And I'll stop there first before I
yeah,
go
yeah,
on to my next question. So, what's the
yeah.
major difference?
Yeah, well, maybe there's a difference between financial accounting and management accounting. Financial accounting is about how you report to external institutions, like an annual report. You have to have your finance because it's regulated. You have to have it.
Right?
And
Most
management accounting,
businesses are good at that, right? Is what you're saying.
yeah, always you must have it, so you have it. So, and then management accounting is not regulated. There's no there are no rules. So you decide as a CEO or management team what information you want, and then you create that information. So HR will have to have information on FTE and on illness, production management on efficiency. And what exactly? Well, you have to define that yourself. And that is management accounting, accounting information for managers. And within that field, cost management is a method by which you can allocate cost to customer groups, product groups, to have a P&L per customer group or per product group or cost per production line. So it's cost management is more like a tool, and management accounting is more like who wants to have the information and how do you want it once per month or per quarter, or what do you need to be successful in your field when you are an HR officer or a chief financial officer or a production manager?
Hmm. And that's different from industry to industry, business to
Yeah,
business.
absolutely.
And so you're saying that as you grow, you're going to have to get down. You're basically talking about the big rocks in the bucket, right? And that you're
Absolutely.
talking about the expenses, all that. But as you go through this process and get more, I guess you could say, more mature as a business
Yes,
owner,
yes, yes, yes.
you're going to get down to the nitty gritty stuff. And that's where you're going to be able to figure out if you can really scale your profitability
Absolutely.
or lose it all, right? Really, right? Is that what you're saying?
Absolutely. So, and I would say there is a best practice per industry. So for a ice cream factory, there is a best practice in management and cost accounting. For a bank, the same. For an energy firm, the same. For your company, the same. So those are the best practices, and you have to look for those, and or to hire a financial manager who has worked there, and then you say to him, "I want to have your best practice." And if he's good, the good guy or girl, then that should work. So I'm very much in favor of, not in favor. There are best practices and use them.
You've been in some I would assume you've been in some important meetings. You've been around some big companies, like you said, the ice cream company. What are some metrics or equations that they're really focusing on? Is it all about speed? Are they looking for the cost per widget, getting it down as low as possible? Are they focusing on employment numbers or I guess you could say just labor in general? What have you noticed that these big companies are focusing on more so than anything else?
Yeah, the board of a company is of course looking at uh, well, in general in manufacturing companies in volume and in margin growth, customer growth, and market share. And if you go somewhat lower in the organization, then it becomes important to know, yeah, what is the gross profit per customer group, or um, and do we get new customers, and what is our net profit of our business unit? So depending on the organization structure, you will have different information requirements and needs for a business unit. And those in those business units, if a big company has 10 business units and they are kind of alike, they will have the same top five management accounting indicators that they use. And that's not only about profitability and cost management. That is also about new business, also about how many customers do not want the product anymore, um, volume growth, and that kind of stuff. And that's basic. That's all. Also, I think in textbooks, that kind of information, the top of an organization always focuses on that. But if you go then somewhat lower in the organization, then the industry specific kind of information becomes important. Netflix is a different company than Ben and Jerry's,
Yeah.
and a bank is a different company than a attorney um company.
So what I've realized is that all of my, you could say, I guess that's financial accounting is done through
Yeah,
QuickBooks, right? And so I'm assuming you're very familiar with QuickBooks Online. Are you familiar with that program at all?
No, no,
Oh,
no.
okay. So it's basically like the accounting software for small businesses here
Yeah,
in the
yeah.
United
Of course.
States.
Yeah. Okay.
And so that's what I lean in on. I have a little bit of a data collection in my CRM that does it, but
Yeah.
most of my financial accounting in
Yeah.
QuickBooks. However, my managerial accounting, or you could say cost accounting, is done in
Yeah.
Excel. And
Yes.
it's a very tedious and manual process. Is
Yes.
that what you recommend? Is that am I doing things the right way? Or is there programs out there that could really expedite that?
Well, that's of course. Yeah, we did not agree on this beforehand, but that's cost report, of course, the bird's eye cost report. But the other answer to your question is you have the right financial accounting information in your system, in your what was it called?
QuickBooks, yeah.
QuickBooks. You have all the information. So the management accounting information can be derived from that very easily. And that is what we see, what I see in almost all companies. The information that you need is there. But one thing you have to do is to make a structure of what you want to have. You have to make the requirements clear. What do you want to have? What are your 10 customer groups? What do you want to know about it? And then you can make a very simple model from QuickBooks to come up with that information. And that goes for small companies, but also for big companies. And the problem with big companies is not even bigger than your problem, so to say. They have so much information, they don't know what they have to do with it in in some cases. The smart companies, of course, do, but the information overload is there. And when there's a new CEO and he wants something different, well, there may be some information that they had or they used to have on a monthly basis disappears, and new information. And so there has to be a really big control from the CEO on financial information. And in your case, you should decide what you want to have, and then QuickBooks will supply you with all information. And the only thing you have to do is what are my 8 business processes and what are my 10 customer groups?
I think you're
Yeah,
shining a light on my issue. Basically,
absolutely. Yeah,
when it comes
I hope so. Yeah.
Oh, yeah, you are. Well, I think many people listening, they're starting to see how, yeah, I'm using Excel and I'm thinking that's the easier way. But really, what I need to refine is my systems and processes for my bookkeeper
Yeah.
to add in those little details that I'm doing separately. That it's one extra step within the bookkeeping process, but my God, that will speed things up on the back end for sure.
Yeah. So, and that's what I mean. The software that we have doesn't, well, needs consulting to a small extent. And what I mean by that is when you buy software that you still have to implement, the thing you have to do is to define the 10 customer groups and the 8 business processes.
Okay.
And then our software supplies that. And then you can say, well, Koen, nice story. Excel can do that also. Well, that's true. But after 2 years, Excel explodes anyway. It will always explode in this field. Always. I've never seen a stable, not never, but the only place where Excel can be stable is when the employees or the people who are working with the system stay working for the same company for 30 years. And then you have a chance that it works. And even then, many of those people make the model very complex so that they have the right, well,
You're onto something. I'm making
absolutely.
it complex and it's a living organism. It just keeps
Yeah,
growing.
absolutely. It's good. And many people do not throw away all information. So then we cannot throw it away. No, no, we had that. And my previous employer also had, okay. But what are the top 10 things you want to have? So the 80/20 rule, that's the whole thing in management accounting.
Wow. You nailed it though. So there's a couple
You
things
nailed it.
there,
You nailed
guys.
it.
But you're bringing some things to light here. All right, so identify the top groups of your customers, and you said
Or
10.
products,
Yep.
uh, 10 customers, products, or channels, or whatever. But
Okay.
also you have to make a decision on products or customers. You cannot have and no, I'm making things complex now, but you have to make it simple. Start with one of those groups, or customer groups, or product groups, or channels or regions, but not all of them. Don't
And
think,
and then you lead into the metrics that you're shooting for, right? And you gave a rough number of 10. So
a
first
rough
off, identify products or groups of the clients or whatever, and then 10 metrics you're shooting for. Is that another key takeaway?
well, maybe not 10 metrics. I'm, of course, into profit and cost. So I would say what you want to have, at least for your top 10 customer groups, is what is the net profitability of each of those customer groups? What is the gross profitability? What is the, well, maybe the people that you are that spend time on these 10 customers so that you have information to also change and so that you can see, well, customer group 7 is not making a net profit. What am I going to do? Am I increasing prices or am I going to delist group 7?
The list, yeah. Okay, so
Or
it's
delist
like we won't
or raise prices. You
or
can
raise
also,
prices. Yeah, you basically you start to see where your hangups are
absolutely.
pretty clear.
Yeah.
Excellent. What else are you recommending in this book here? Because this to me is, I mean, I don't think a lot of people, especially for startups, don't
Yeah.
see how important this is to do from the beginning. And we're a 7-year-old company. So we're just starting to get into the nitty-gritty details. And this is why it's so exciting. So and this is this, by the way, probably never ends. You can constantly refine and get more professional, more
Yeah. Yeah. Yeah.
efficient. And that's probably what you want to preach more so than anything else is that you do this. This is a habit that you create, but you can always get better at it, right?
No, that's not I would say that let's take an example of a company of 100 people and they are in the service industry. It doesn't matter where. They only have financial information in QuickBooks. And then I would say we are going to rate their management and costing system or their profitability and cost management system, and we rate it on a 3 on a scale of 1 to 10. So it's the quality is 3. I would say that within half a year, it should be possible to have the management and costing information on a level 8, and then it's okay. You do not have to have a 9 or a 10. And then you stick to that for the rest of your life. So it's a one-time investment.
Oh, okay. So once you
It's
right
not,
the ship,
yeah,
you are pretty much protecting yourself in the future. But once you write it one time, which
yeah,
could be a little bit of a transition, once you
absolutely.
write it,
That's a
you're fixed.
transition. Yeah, that's a transition. So, and you can imagine that Unilever is not hiring me. Can you imagine? They all have all this information. They're not calling, they have the information. They are on the level of an 8, 9, or 10. But many companies where that we consult are on a basic level and they're not too happy. Some are, some don't. And there are 3, 4, 5, 6, and they want to go to an 8. And then we are hired. And we're not going to for a 10, because a 10 should be for the product itself, for an iPhone 16. That should be a 10. But the financial information should not be a 10, it should be an 8. Why should it be a
Ah,
10?
that's interesting you say that. My
Yeah, but that
assumption
is
would
your rule. That
be
is your 80-20 rule again. To some extent. It's the same subject.
that's hilarious though. I would
Yeah,
I would
because
think I would think
if you go to a 10, then your financial department will increase by 100%. Because the 8 takes 3 people and the 10 takes 6 people.
oh, okay. Once again,
So
there are too many cooks in the kitchen to get it really dialed in.
yeah, but it's
3
also
is
expensive.
enough.
And it doesn't add any value to go from an 8 to a 10 because the 8 is enough to steer your company.
Got it. Okay, so there is a good and there's a standard that is this is good enough, right?
Yeah, yeah. And
And s-
cost effective also.
yeah, you're right. Because once again, you could hire 100 accountants and probably get it dialed in, but my God, the cost based off of that would be it doesn't make sense financially. You're
No,
right.
but Mike, you can hire a big four accountant, and they will come up with 100% of your 10 out of 10. But that's too expensive for
Yeah.
that. So they can build a model that makes you very happy. But then you have 3 people on your pay list, on your payroll. So
Got it.
keep it
Okay.
simple. Keep it simple, and you have to know you. If you do not make it simple, it becomes very expensive, and then yeah,
Wow, that's awesome. Okay. And so, um, when you meet with these companies that are
yeah.
threes, is there any common trend that you could share with us to say, don't be like these threes? What have you noticed amongst them?
Amongst these what?
Threes, the level threes, you said they're,
Oh,
hey,
the level
they
threes.
go from a
Oh,
three that you want to take with, if they work with you, they go from a three to an eight, and that's good enough. So these threes, what are
yeah.
they doing that's so poorly in the eyes of
Well, they
someone like
can.
you?
Well, they can have a great product, and they can be great managers. So it can be a great company to work for, and people are satisfied. But it could also be the case that they are having customers or specific products that are not making enough margin uh, to be sustainable in the long run. But it can. There are many companies that are making profit, maybe not enough. Uh, Happy customers, happy employees, the great factory. So you can do without. But if you want to make a step in this field, um, you have to do something. And if you are rich enough, and then we go to the beginning again, then you will maybe not notice it because you are rich enough. So why should you do anything? But if there's pressure on cost, then you have to do things in this field.
Yeah. So complicated pricing structures,
Yes.
not understanding
Yeah.
where their profit margin is, right? Because if they have too many products, they might not be focusing on what's working, what's not. So that's number one. And I guess
Hmm.
number two, maybe, like you said, there's some type of financial windfall or success somewhere that's not giving them the urgency to
Absolutely.
dive deep into the numbers.
Otherwise, many companies would have this kind of system in place.
Got it.
Many
And
service industry, yeah.
you make me think of what Steve Jobs did whenever he came back in 97. I think it was the year when he
Hmm.
came
Yeah.
back. He simplified his product line, right? He cut loose of everything because of all this cost. He didn't know what was working. And he brought it down to, I think, three items, maybe even two.
Yeah. Yeah, that's important. But he was smart enough to not even have the books, or he didn't look at QuickBooks or at Cost Report. He just did it because he was so smart. But most people are not that smart, so they have to have they have the urge for a good system.
Wow. And so whenever you have this all dialed in, number one, your gut instinct is going to
Hmm.
be in check, but also your decision making is sped up.
Yeah, yeah,
You're
yeah.
also able to hire and fire faster or more efficiently,
Yeah,
and you're able to market more accurately of what's working, what's not, probably allowing your sales teams and individuals to reap benefits financially.
yeah. So what we've also done in the past years is to for several companies to build a so-called pricing tool. How do you set the right price for a customer? What are the minimum costs that you have to charge? What is the markup for overhead? What is the profit margin? That's the same topic. How do you how do you give salespeople the right tool to get the right minimum price? They have to know the cost.
Yep. And so
Otherwise,
do you always ask your clients or people you work with right out of the gate, what's your break even cost? I think that would be a phrase that you kind of
they
allude to
no, many don't
constantly.
know, but don't know. That's not a question I ask too much. No, no.
Okay. Because some
Who's
people
good?
don't even know that, right? They don't know what their
I'm not on
total
the.
cost is.
Well, they know, of course, what their profit is, so they know how much profit is above the line, so they know the break even, I think.
Oh, okay.
Yeah.
Yeah, I would think that some people in the small business area,
Now,
if you ask them
that's
whenever it
right. Yeah.
comes to
Yeah.
whether it's construction, I work with a lot of people in these worlds, and you
Yeah.
could ask them, well, I don't even know that number. I know I got to get my guys this, this, and this. But if you don't know your numbers, you're going to be running this ship without a rudder, basically, or
Yeah.
without a sail, if you, however you want to look at it.
Yeah. So when you start a business, then you spend a lot of money, and in the beginning, that's okay, you need it, but after a couple of months or after a couple of years, you have to have monthly information on profit and loss. That's what is my recommendation.
Beautiful. So get away from Excel is what you're saying here, Koen,
Oh, yes,
and
please.
get
Yeah,
into the QuickBooks. Make sure your accounting software is dialed in with all the
accounting
right
software.
info.
Yeah, you have to have for accounting, for financial accounting, you have to have, of course, accounting software. And for really a standalone decision support, Excel, and for management accounting, cost report. That's what I would say.
So if someone were to work with you, somebody's listening to this and
Yeah,
they
yeah,
want to
yeah.
reach out to you, what's that process look like? Where do they go? What's your website? All that.
Well, the website of our company is SIS Finance, and the company name of the software, the cost management software, is Bird's Eye Cost Report. That's costreport.nl. Costreport.nl.
And
And there's
your
also
group
an English
or
version.
target client or target audience, what's that person look like? What type of business? How big are they?
That is a very good question. You know, for consulting, well, well, maybe I'm too open, but for consulting, the some of the larger firms, for a cost report, I would say a company with 100 people, 200, something like that. It's the sweet spot. But but also smaller companies and bigger companies can fit in. So yeah. But for example, our software will not be bought by big banks or big manufacturing firms for globally. It's really a tool for entities to see what they earn, and for business units. And yeah,
Got it. Well, looking at your cover, I love it. It's clean, it's simple, and as a book publishing guy, I'm
yeah,
always drawn to that. Super simple, easy to understand. Profitability and cost management, the difference between a profitable and failing business. One last question I got for you. Outside of your own book, is there one that you recommend to our audience when it comes to either just business advice or financial advice? Any book that really stands out in your life as a defining moment, if you will?
yeah, that's difficult one. I have a Dutch book. I don't know. I don't have one. No, no, no.
Gotcha. Yeah. So I just like to hear because we always like to take a list of, maybe books that made you fall in love with this career path that you're on. So
Yeah,
if
okay.
there's
Well,
not
in that case, I would say that the books of Hooper and Kaplan on this subject are really written well. So Cost and Effect is one great book of 25 years old, I think. Cost and Effect.
cause and effect,
Yeah, yeah.
we did a book similar name, so I got to check that out.
Mhm.
Interesting,
Yeah,
guys. Look him up. You're easy to find on LinkedIn, right?
yeah,
Yeah,
absolutely.
so I believe that's how we got in touch with you. So, guys, look him up. Koen Perik. It's Koen Perik, Perik. The book is called Profitability and Cost Management: The Difference Between a Profitable and Failing Business. Pick it up, leave a review. Really good guy, knows his stuff. Thank you so much for being here, man. I love talking about this stuff with you. So,
It was
uh,
really great, nice to do this, Mike. Thanks for having me.
you've really helped me out in understanding the groups, some of the metrics that
Yeah,
I got to focus
let's
on, and you might be the guy that gets me away from Excel. So I appreciate that.
great, great, great. So, okay, thanks again.
Thanks again, man. Remember, guys, $1 million book will lead to $1 million life. Right on.